Do you own a property? Does that property have equity? How would you like to purchase another property using no money out of your own bank account? Stay tuned and I'll show you how I did just that. Hey guys, I'm Tyler Madden. I'm a general contractor who specializes in luxury remodels here in Denver, Colorado. While running my own business, I also invest in real estate with my wife. One of my favorite ways to invest in real estate is tapping into equity that we have in our own primary house and our previous primary house by use of home equity lines of credit, otherwise known as HELOCs. It's one of the best creative strategies for investing in real estate if you've got a primary property with some equity into it. So let's say you already own the property. The equity comes into play because that's the difference between what it's worth now, according to the market value, and what you owe on it. That is equity. HELOCs allow you to access a portion of that equity as a line of credit. You can access your equity in a few ways, either by selling your property, cash out refinance, and like I said, my favorite is the HELOC. Reason this is my favorite is because it's something that you can use over and over. You sell the house, that house is gone, that equity is cashed in on, that's it. You take out a cash out refinance, you get that cash one time only, it's gone. The HELOC is different. It's a loan, usually a second mortgage added on top of your existing mortgage. It's basically an equity-based credit card. It allows you to access a big line of credit, but you only pay on what you use. And the best part is that most of the time, interest rates on HELOCs are actually way lower than a real credit card. Sometimes under 5%, but they do move with the market. You can get a home equity line of credit on your primary home or your investment property. Just know that the terms and rates are slightly different for each. On an investment property, you can get a slightly lower ratio of your equity as a line of credit. You might also be required to make a larger payment to the principal, and you might have a shorter draw period for those funds. But for the purposes of this video, we're going to dive more into primary house HELOCs. Once approved for a HELOC, lenders offer a line of credit up to a specified amount. Instead of a lump sum payment, HELOCs come with a set draw period. Usually on a primary house, it's up to 10 years, during which you can continue to withdraw money as needed. You draw it, you pay it off, you repeat until the draw period ends. The best thing about it, like I said, is that you can redo it as many times as you can pay it off. So for example, let's say you own a house that's worth $500,000 and you only owe $200,000. That means you've got $300,000 in equity, but this does not mean that you can get a HELOC for $300,000. Banks will offer a HELOC anywhere from 70 to 90% of the ARV. ARV is the after repair value of the property, minus what you owe on the property. So let's say your bank offers to go up to 75% LTV on your property, and that property appraised at $500,000. That gives us $375,000 that they will loan you, but then you have to subtract what you owe on the property with your first mortgage. So we would subtract $200,000 that you owe from the $375,000 that they will lend you, and you can get a line of credit for the difference, which is $175,000. So the HELOC option is very attractive to BRRRR investors and even flip investors. It's like a short-term loan, and you can repay that loan quickly after the property is refinanced in the BRRRR example, and then repeat this process over and over. What's even better is you only pay interest on what you use from the available funds, and you don't pay anything until you draw on it. So if you're unfamiliar with the BRRRR investing method, go check out my other YouTube videos on that topic so you can learn the nuts and bolts of how to do that. It's important to shop for HELOC terms that align with what you need and want with regards to timing, rate, draw period, how high the bank will loan related to ARV, etc. Oftentimes, community banks are the best for these terms and can be a bit more aggressive than large banks. It's also beneficial that you can create a more personal relationship with these smaller community banks and credit unions. So don't pass up the opportunity to make good relationships with your bankers and your lenders locally. If you're wanting to use a HELOC to fund another deal, then there is a timeline you should follow. First, you want to find the bank you want to go with and apply for that HELOC. You'll need to wait for an appraisal and a closing time, usually around 30 to 45 days. Remember, the appraisal is the key component to a HELOC because you need to determine what the market value of the property is. Meanwhile, you'll find your next deal. And then after closing on that HELOC, you can draw on that HELOC and use that money towards your next investment strategy. You can either use this as the down payment or the rehab budget, depending on how big your equity position is and how big your HELOC is. Typically, I like to put mine into BRRRR properties so that I can go through that sequence and get my money back, and then I use that money to pay off my HELOC. So to use a real world example, I'll tell you a little bit about what we've done with our HELOCs. We got our first HELOC before we bought our second home. So we took out a HELOC on our house as it was a primary residence. We kept our first house as a rental. So we used the HELOC to fund the rehab of the new house that needed to be fully remodeled. That's the house we're in right now. So we forced a ton of equity in a house that had a great value add opportunity. Once we finished the remodel at our new house, we did a cash out refinance and paid off the original HELOC that we had, and now we have those funds available again. After 2 more years, we gained even more equity in this property, and we got another HELOC on this primary house. Keep in mind, we already did a cash out refinance, and we had enough equity over those 2 years just by virtue of Denver appreciating rapidly and continuing to do some upgrades to the house. We used both of those HELOCs combined, and we found 2 multifamily properties on market, and we purchased them at the same time, using those HELOCs to fund the deals. I have personally used HELOCs to fund my deals. I have 2 HELOCs, and I have access now to over 6 figures multiple times, which allows me to quickly make decisions to purchase my next property and to fund the rehab on my purchases. They are now paid off again after my last multifamily BRRRRs, and I can't wait to get more. It is quite literally my favorite and the best, personally, creative way to finance my deals. Using a HELOC will allow you to use a portion of the equity that you have created in your primary or even in your investment property. It's a great alternative funding source to do any number of things. You can upgrade your own home, you can boost your credit, you can consolidate debt, or even buy new properties. At the very least, understanding how to use a HELOC for investment properties is crucial for anyone who wants to gain a competitive edge. It's important to make sure you use your HELOC on an asset that makes you money and not on liabilities, like buying a car or a boat. I even know people who will lend out the funds on their HELOC and they'll charge more interest than the bank charges them, so they'll become a hard money or a private money lender with their funds. They get to make the additional interest for doing virtually nothing. Let's review a few of the pros and cons. Pros: you can use this simple lending tool to help you find money to do more real estate deals, and you don't have to go raise it. If you're already sitting in an equity position, this is a great option for you. You can tap into the same amount of money you'd have if you had sold the property that had appreciated, but without actually selling. Yay, larger portfolio and continued appreciation on the asset. It's exciting to get money while avoiding paying real estate agents, closing costs, etc., which would be required if you did sell the property in order to invest in something else. It's a cheap financing option in terms of interest rates and closing costs, and there are a few cons to be aware of as well. That equity is spoken for on the property after you've taken out the HELOC, even if you're not using that line of credit. So you can't go do a cash out refinance or any other means of accessing the equity until or unless your property continues to appreciate more. HELOCs come with an adjustable, read unpredictable, interest rate that fluctuates with the market rates. So be aware of what market rates are going to do, and that's why I recommend using your HELOC funds on short-term investment strategies. Some terms require you to make only interest payments, which is beneficial, but there's others that might actually require you to make principal payments as well. So factor this in when you're looking at your holding costs of paying off your HELOC as well. You need to pay off the HELOC in the agreed upon draw period, usually 5 to 7, sometimes 10 years. If it's an investment property, I've seen them as low as 2 to 3 years. So be aware of when you need to give that money back or pay it back if you don't intend on selling the property. Do you have a HELOC? Do you have equity available on one of your properties that you're feeling excited to tap into? Let me know in the comments what you're doing with your equity, or if you didn't even know you could do this. I had no idea until I spoke to friends in the industry that I could tap into the equity without selling. If you're not subscribed to this channel, hit the subscribe button now. We publish new videos every single week to help rookie real estate investors like you succeed and get started. If you're ready to take the next step with us, I recommend you check out this next video because we got you covered. Hey guys, thanks for listening. I'm Tyler Madden. You can find me on most mainstream social media sites like MySpace and Instagram. A little more active on Instagram these days. At Tyler Madden is my handle. I would love to keep up with you guys. I'm very passionate about the rookie platform, so please interact. I'd be happy to connect with you guys and help you where I can. Thanks for coming by.